recording now. We have just gone over one of the quiz problems, and I will send it out to you guys. They give all the purchase information. We calculated the extended cost here. We calculated the goods available for sale in units, which are 75, and in dollars, which in this case were 4,625. They told us that ending inventory was 25 units, so we knew we had 50 that were sold. Then they said, give us year-end dollar amount of ending inventory. But I said to everybody here today, we're going to do it the long way. So FIFO method only applies to cost of goods sold. So first in, first out. So we have to add up to 50 units. So we go back to the first purchase, 10 at $40. Second purchase, 15 at 55. And then we only have to go into the third cost layer for 25 units at 70 for a total of 2,975. For ending inventory, we have 25 units. We still left 5 units in this cost layer at 70. Then we have 20 at 65. And that gives you your ending inventory. So for the final exam, I want you to know how to do, for the final exam, I want you to know how to do cost of goods sold and ending inventory calculations. Don't just put a number down, show me your work, because if you get the wrong number, I can look at your work and possibly give you partial credit. So never just put the final number down. Okay, we also demonstrated it for Lifo. And here it is here. With Lifo, again, it only applies to cost of goods sold. So we go to the last purchase, which was 20 units at 65. And we're trying to add up to 50 units sold. We use up that cost layer. We go to the next previous purchase, 30 units at 70, add those two together. Cost of goods sold using Lifo is 3,400. Ending inventory, we have to add up to 25, and it's whatever's left over. We've already used up the third purchase and the second purchase. Those cost layers are gone forever. That leaves us with the first purchase and the beginning inventory. So we add those together and we get 1,225. And as I said just now, as a last check after you've done this, add the cost of goods sold, add the cost of ending inventory, and they should add up to the cost of goods available for sale. Okay. All right, I'm going to send you guys this. I will send it out in an announcement after class. So it's I think this is week 11, 2023. All right. Okay. What else would you guys like to go over? We've done Lifo, FIFO. What else? You're just starting the so you're getting close to finishing chapter 7. So, and final exams start on Tuesday, but I will be doing a review session from 3 to 4 next week. So be aware of that and be aware of that. Lots of Lifo, FIFO questions on the quiz. You guys know how to do weighted average? Tell me that's fine. Yeah.
Yeah, weighted average was a lot easier to grasp. The average in general was easier than FIFO.
Oh, I'm glad to hear that. Okay. Yeah. Return. Right. Oh, how about the tax implications? When let's go back and look at that one I was just showing you. So let's compare these two. All right. So let's insert table. Oh, not here. Insert a table. Okay, so this is FIFO. This is Lifo. This is cost of goods sold, ending inventory. So 2,975. Ending inventory is 1,650. Using Lifo, it's 3,400 and 1,225. All right. I want you guys to tell me which is can you guys see this? Okay. With this set of information, and this set of information is right up here. Maybe we'll. With this set of information, we calculated and we came up with cost of goods sold using FIFO of 2,975, but LIFO is 3,400. Ending inventory using FIFO is 1,650. Now remember, it's the same number of units. It's just a question of FIFO versus LIFO. Okay. So cost of goods sold in this case was 50 units, and ending inventory is 25 units. Why, can you explain to me, anybody, why LIFO is higher given this set of information?
Because you're taking the newer costs, which are
Say
higher
it,
than
say it again, Talia. Yes, I agree
you're
with you.
taking the most recent costs, which account for like inflation and increased prices.
So we definitely are using most recent costs with LIFO for cost of goods sold. Okay. And in this case, how is that making this higher? You're saying inflation?
That's one of the options, yeah, I'm thinking.
Mm-hmm.
But then the ending inventory is lower than FIFO because you're taking the older numbers for inventory,
Right.
the older prices.
Okay. So even though this is not a perfect inflation, because you have that dip right here from $70 to 65, overall, you can see that prices are going up. They started at 40 and they ended at 65. So because LIFO uses the most recent cost for cost of goods sold, in times of inflation, LIFO is going to give you the highest cost of goods sold. Okay. Ending inventory is using the oldest cost. Now look over at LIFO. Here, you're using older costs. So in times of inflation, it's going to be lower because you're using the older cost for cost of goods sold. However, ending inventory is going to be the more recent cost. So when I use the term recent, you can substitute another word there. You can substitute replacement value. So the recent costs for cost of goods sold are more representative with LIFO of what it would cost to replace it. So your future purchases are going to be in alignment with that. For FIFO, the more recent costs are with ending inventory. So cost of goods sold lives on the income statement. Ending inventory lives on the balance sheet. So that recent cost, so when you're using LIFO, your income statement costs are more representative of what you're going to be paying going forward. But your balance sheet inventory costs are old. Okay. On using FIFO, your balance sheet is more representative of replacement costs. It's more current costs, and your cost of goods sold are older. So it's there's always going to be a trade-off. Do you use FIFO? Do you use LIFO? Most companies prefer LIFO. All right, anything else on chapter 6? I think I'm gonna stop sharing. I keep going back and peeking at the quiz. I don't want to put that on the video. Yeah, just a lot of LIFO, FIFO, and understanding inflation and deflation. Okay, all right. So that is about it for chapter 6. I mean, those are kind of the highlights with respect to the big learning in chapter 6. The good news about chapter 6 is there's no journal entries. And then my other question is, what else do you want to go over today in terms of review? Is there anything else that's... I want to pull up the practice exam really quick for you guys. So when is the practice exam due? Let's check the calendar. It is due, I guess not until Sunday night. So you guys get a little reprieve here. You're just focusing on chapter 7. So let's just take a quick look at it. Let's see. All right. So I would say don't do the practice exam until you've had a chance to just really do some review. So journal entries, and again, when you're reading test problems, always go to the instructions first. Journal entries using perpetual. Here's periodic using calculating FIFO, LIFO, gross margin in dollars, gross margin in percent, average cost. Multi-step income statement and balance sheet. Be sure you guys know how to do that. How to do those 7 adjusting journal entries. And then finally, the bank reconciliation. And then more journal entries, calculating net sales, cost of goods sold, gross profit percent. And then we put in a bunch of extra problems in the back just to give you guys more drill. So there's going to be quite a few of those. Lots of adjusting journal entries. I think that's an area where you guys need a lot of work. Closing journal entries, income statement, classified balance sheet, and journal entries for perpetual and periodic. So as usual, the practice exam is much, much longer than the final will be, but you want to make sure you've given yourself a lot of time to practice. Okay. And more bank reconciliation, and then interest calculations. Okay. And purchasing equipment. Okay. So just make sure, give yourself time. I mean, ideally, if you have the time, give yourself time. Whoops, I'm sharing the wrong screen here. Give yourself time to really go through the practice exam. And if you don't have time to do the whole exam, go through and pick out problems from each chapter. So you make sure you've reviewed every chapter. Lots of journal entries. Now, so in chapter 3, we had 13 journal entries. In chapters 4 and 5, we had another 25. And then finally in chapter 7, we have about 4 or 5. So it's close to 50 journal entries, I think, or more. 13 plus 25 plus 5. No, it's like 43. I guess that's better than 50, but it adds up. Okay. Any other questions? And then I'm going to go into conference. So for chapter 7, it's in 2 pieces. It's in internal control, and we have a lot of principles of internal control that you need to understand, like separation of duties, independent verification. And then the other half of that is, and you will be quizzed on that, and your homework will be on that. And then the other half of that is your bank reconciliation. Okay, I'm gonna stop the recording here.